we now have a lot of evidence that covert yield curve control already happened. So as you can see there on your screen, the Fed now owns 55% of US Treasuries between 10 and 20 years in duration. This is up from 20%, so it has more than doubled. It has almost tripled the amount of US Treasuries in longer duration that the Federal Reserve owns. So this is yield curve control, whether it is covert or overt. The Fed did not issue a press release ahead of time saying they were going to buy these treasuries at this duration. They just went ahead and effing did it. So this is Japanification. This is what a lot of developed countries and Western countries are going to have to do. They've already been doing different variations of it as the amount of government bonds that each respective central bank owns has gone from before the pandemic, where it was 10% or less of all government bonds owned by the local central bank, to 40% or more is now the average. So it's up 4x for developed countries. So these are your Canada's, Australia's, New Zealand's, many other countries. The amount of government bond ownership by central banks has exploded in the last 20 or so months. So yes, the yield curve is still upward sloping, but it looks like the long duration yield, so the 30-year US Treasury yield, is now being capped below 2%, or at least keeping it in a range below 2%. So the Fed is definitely doing covert yield curve control. They didn't announce a press release saying they were going to do it. Remember, I've been covering for the last couple of years that Lael Brainard, who is a Federal Reserve Board of Governor, she almost became Treasury Secretary. She had been hinting for a while that the Fed would start it, but they didn't make an official announcement. And just in the last week, the Fed's balance sheet is up another $85 billion, so it is now over $8.3 trillion. The Fed's balance sheet just in the last 2.5 years is up enormously, but other central banks are also increasing the money supply, also drastically expanding their balance sheet, and the market, especially the currency markets, are weighing this against the dollar. So if another country and their central bank is growing its balance sheet, is expanding their money supply faster than the US and the Federal Reserve, then the currency markets will probably price this in faster. The foreign exchange rate or currency markets, Forex markets. So someone went and did the math, as you can see there on your screen, and there is proof that covert yield curve control has already happened in the last 18 to 20 months. The Fed did it. The Fed did not announce it, and it was covert, and it's already happening. This is Japanification. This is yield curve control. The Fed will not allow interest rates up above a certain range without more and more intervention. So tapering and rate hikes are a false narrative. The Fed may actually try a little bit of tapering, but then the leverage short volatility trade could blow up. And at this point, any rate hikes, so 1 or 2 quarter point rate hikes, will blow up the leverage short volatility trade, and all the other crazy and dumb hedge fund managers that think that all they have to do is use other people's money, borrow from repo, leverage up their bond trades, front run the Federal Reserve Bank or the European Central Bank, and then even when their bills double, say that there's no inflation because they're making so much money gambling with leverage on their bond trades. That is until they're caught on the wrong side of the trade with their pants down, and then they're begging a government or a central bank for a bailout. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there is now over 180 articles, charts, and audio podcasts behind the paywall exclusively for patrons for only $5 a month, the cost of a Starbucks cup of coffee. I think it is one of the best deals out there. I charge less than anyone else in the space for premium content. If you don't like it, you can always cancel. And there is 26 new articles out in the last 11 weeks on a lot of interesting topics about global macro, companies, and sectors. A lot of analysis on gold mining, silver mining, precious metal royalty and streaming companies. We're looking for income opportunities in the gold space, as many gold stocks still have some of the best profit margins, and they have very clean balance sheets compared to any time in the past. The amount of debt many of these gold miners have is down enormously. Net debt is down enormously. And so a lot of these gold miners or gold stocks are increasing dividends despite the gold price going sideways. So these are becoming income opportunities, especially some precious metal royalty and streaming companies that are increasing dividends substantially. So if you want to read more about that, there is a lot of new articles out behind the paywall in just the last 11 weeks, all for the cost of a Starbucks cup of coffee. So if I could wrap up this short little video very quickly, it is rather obvious that the Fed did covert yield curve control. They will allow rates to rise, but only a certain amount and only in an acceptable range. If rates rise too much, the Fed will stop with this false narrative of tapering and will have to reverse course immediately and do quantitative easing, because the Fed is the buyer of last resort. We know that net foreign purchases of US Treasuries over the last 14 years actually are net, they're only up a little bit. So the national debt has exploded in size. Meanwhile, the net foreign ownership of US Treasuries is barely up $100 billion in the last 7 to 14 years. It's barely up at all. So foreigners are not increasingly buying a lot more debt. And the US banking system, the large banks, and the pension funds, and the Federal Reserve are going to have to buy more and more and more US Treasuries, unless, of course, the US government forces people to buy and hold US Treasuries in their retirement accounts while they are intentionally inflated away. And this was actually a suggestion by Ben Bernanke for Japan and how Japan could deal with their insane amount of government debt. He called it zero coupon perpetuals and just inflate away the value of the debt, or change all the debt to 100-year debt and just inflate it away. But the zero coupon perpetuals are another scheme that Ben Bernanke came up with when he was advising the Bank of Japan and the Japanese government back in 2015 and 2016 what to do with their monstrous debt. So the US may be headed down the exact same path or a similar path as Japan. But it is clear evidence that covert yield curve control has already happened.